Well, thank you very much, Brandon, for the introduction, and thank you, everybody, for your interest in attending the presentation today. I'll guide you to the forward-looking cautionary statements and ask you to review them when you have a moment. Palladium One is a exploration and development company targeting large-scale PGE, copper, and nickel deposits in Tier 1 jurisdictions. Our flagship project is the Läntinen Koillismaa, or LK project, in north-central Finland, and it's palladium dominant. And some of the key value propositions for the company, and we'll get into greater detail as we shift through the presentation, but they're outlined on this slide. And palladium, as you may know, is the most precious of the four major precious metals. It's currently trading at approximately $2,200 per ounce and has more than doubled in the last 2 years, making it more valuable than gold. At LK, we have palladium, platinum, copper, nickel, and gold, but the PGEs really play a critical element in the modern green economy, and that is causing a lot of demand currently and future demand expectations for companies such as Tesla, where we see Elon Musk reaching out and asking people to open up more mines. In the PGE space, there has been industry consolidation over the last couple of years. And as a result of that, there are fewer investment alternatives for investors seeking exposure to the PGE space. And certainly there are very few advanced exploration and development companies in favorable jurisdictions such as Finland or Canada. What's unique about the PGE space is that about 80% of global mine supply comes from jurisdictions with significant jurisdictional and or political risk. So we think that developing a large-scale asset in the European Union has a lot of merit. At LK, we already have a 43-101 open pit constrained resource, and we have very realistic growth expectations that we'll outline later in the presentation. We have been issuing a series of press releases based on the drilling we were able to complete prior to the COVID shutdown, and we'll touch on some of those. But I think it's important to note that drilling did resume yesterday in Finland. We have a very interesting program underway, and we're fully funded for it, and we have a very strong shareholder base. So recent transactions in the PGE space have been led or driven by South African producers, where they've invested over $3 billion. And the consolidation of the compression in the industry is now such that 85% of the global PGE production is only coming from the top 5 producers, who have an aggregate market capitalization of over $80 billion. With very few advanced exploration or early stage developers in top ranked jurisdictions, we believe our strategy to grow a large tonnage, high value resource in Finland should bode very well and attract the attention of larger players in the space. So, why has palladium been on a run for the last number of years? There's been an 8-year supply deficit. Strategic reserves at central banks have been largely depleted, as have the ETF holdings. And that's really been driven by industrial demand. Palladium is critical in reducing harmful emissions in the automotive exhaust and is used in this 3-stage auto catalyst. So we're seeing stricter environmental standards globally, as outlined in the table on the bottom right, as well as a phasing out of diesel-powered vehicles in favor of gas or hybrid vehicles, both of which are causing incremental demand for palladium on a per unit basis. But what is really driving the demand and the fundamentals, I think part of the reason why these acquisitions have occurred, is that the loading in each vehicle has increased quite dramatically over the last number of years. So under the previous Euro 2 standard, which has now been phased out, we're now at the Euro 6 standard, the loading of PGEs on a per vehicle basis was approximately $30 US. We're now looking at loading in the neighborhood of $430 per vehicle. So quite a substantial change. And Even with the lower production or lower demand as a result of COVID and less new vehicle sales, those have largely been offset by mine closures, reduced productions, and disruptions in supply chain. As a result of that, the expectation is that even post-COVID, we're going to see a supply deficit in 2020 and beyond, as there simply aren't enough mines coming on production in the future. But what's really constraining the market is that only about 10% of global supply is as a primary product from a mine. So in other words, 90% of global mine production is as a byproduct of other mining activities. And therefore, the miners are very constrained from increasing supply specifically of palladium without impacting their other operations or the rest of their operations. And that's why we feel getting new capacity online is very critical. As well, as I mentioned earlier, the jurisdictional risk of the current supply chain is quite high, where approximately 41% of supply comes from Russia and 38% from South Africa. So the rest of the world is only about 21% of overall supply. And as we move into, or as we've moved into 2020, China was accounting for just under 30% of global demand of palladium. And that's before considering the step change in their environmental regulation to the China 6 standard that took place on July the 1st. So as a result of that, we think there's going to be more demand coming out of China, and automotive manufacturers need to be able to respond to that demand requirement that's coming from legislation. And that is also obviously coupled with the whole notion that palladium is one of those precious metals, and there is certainly an investment demand aspect to it. So there's a number of different items that are causing a difficult market situation. As far as Palladium One itself is concerned, we have a current market capitalization of approximately $16.4 million. We have $3 million of cash in the bank, and have a share price of approximately 13 cents per share. As you can see from the chart, we got hit pretty hard with COVID in March. We had initiated our exploration program for 2020 in January. Our share price was up at around the 24-cent range, 24-cent range, and fell off a cliff as COVID was taking hold in Europe. But we are obviously getting back up to where we were beforehand, and we're looking forward to the future.
Derrick, if I may,
our largest shareholder is Eric Sprott. He came into the story when we put the company together in May of last year, and increased his position to 21.3 million shares of a total 126 million outstanding in. So our team is really led by 4 people: myself, Neil Pettigrew, who's on the call here, and I'll be handing the presentation over to him. He's an expert in the nickel PGE space, and is also a director of the company and our VP exploration. Importantly, we have Dr. Peter Lightfoot, who's former principal geologist, nickel sulphide global project generation for Inco Valley, as part of our team, as well as Lawrence Ralston. So a tremendous amount of geological heft to support our advancement. So in Finland, as I said, we're in north central part of the country. Finland was ranked by the Fraser Institute as the #1 jurisdiction globally from a mining policy perspective, and #2 globally from a mining investment attractiveness perspective. In large part, that is as a result of a very rigid regulatory regime. Rule of law works extremely well, and they really are trying to build out the mining industry even more so in Finland to underpin their economy. Where we are specifically in Finland is an area that has a lot of existing infrastructure. We have paved road access to our properties. We have railway only about 40 kilometers away. There's high voltage power on the property. We have ample amounts of water, and having all these basic infrastructure elements should bode very well for a development scenario, given it is likely to decrease the capex requirement. As well, Finland has both copper and nickel smelting capability, as does its neighbor in Finland. Also, one of the things to consider when investing in the Nordic countries, and Finland in particular, is exactly where you are in the country. And we do not have any issues with regards to the Natura 2000 protected lands, nor are we dealing with issues of reindeer herds. And we're about 2 hours away from major cities of populations of roughly 200,000 people. So easy drive from both locations. We have two principal projects in Finland. Läntinen Koillismaa, as I mentioned, LK is our flagship project. It's 100% owned. The key bit of information here is that we have 38 kilometers of favorable basal contact that we know is largely mineralized based on the historical work that was undertaken by the state years ago via Outokumpu and GTK. Here we're looking at bulk tonnage, disseminated mineralization, so low-cost open pit mining operation. And we already have NI 43-101 open pit constrained resource at the first zone being Kukua, which we'll show you greater details of. What makes LK interesting and important is that we have a high tenor palladium dominated sulphide. So we have a ratio of 3-to-1 palladium versus platinum, which is rather unusual and bodes very well for the demand that we're seeing in the marketplace. The project itself is very much, there are many similarities to Plant Reef or the Bushveld, and we look forward to growing the resource base there. Adjoining LK, we have the KS project, which is much more of a feeder or conduit style mineralization. It's also a project that's 100% owned. It's royalty free. It's quite large. It's 2,000 hectares, so very much regional scale. But here the target is high grade massive sulphide potential and has similarities to both the Norilsk and the Voisey's Bay deposits. A resource at Kukua is pit constrained and whittle pit with in aggregate just shy of 1.2 million ounces palladium equivalent at an average grade of 1.65 grams per ton, split 50-50 between indicated and inferred. So the indicated grade is 1.8 grams per ton. Importantly, when we published this work and did the estimate last year, we used a price deck of $1,100 for palladium. So very conservative in the context of the current market where we're seeing a $2,200 per ounce price. And as well, we're using a cutoff of 0.3 grams per ton palladium. So not on an equivalent basis, but on palladium basis solely. And what we think are fairly reasonable mining dilution recovery factors. So the pit itself only goes down about 275 meters at its maximum depth. And as you can see in the attached image, mineralization comes right to surface. And the conceptual pit has a very low waste to ore ratio of only 3-to-1, suggestive of a low-cost mining scenario. Importantly, LK has a high tenor PGE. So of the 1.8 grams per ton palladium equivalent grade, 1.2 of that is PGEs, and the bulk of which are 0.8 grams per ton is palladium. So, from a valuation perspective, there was a note put out by David Davidson at Paradigm Capital in Toronto, one of the institutional shops, last month. It was interesting. They suggested in the research note that they published that, from a valuation perspective, applying $50 per ounce, given the strength of palladium, was a reasonable factor. And I just leave that with you to consider the math. How does LK stack up to other companies? Well, if we're just looking at measured and indicated resources, LK has the highest PGE grade compared to some of the other projects that are out there. Doesn't have the tons. We only have about 30,000 meters drilled at Kukua, whereas Polymet or Generation Mining, New Age metals. They're much more advanced projects from an engineering standpoint and are trying to find a way to get them built, while we're very much still in the exploration phase and resource growth phase. At this point, I think I'll turn it over to Neil Pettigrew to walk us through the project itself and some of the news that has come out as early as this morning.
Well, thank you, Derrick. So the project that you see up here is the LK project as well as part of the KS. The various colors that you see are the different forms of land tenure that occur in Finland. The yellow being permits, the red and orange is reservations. But the thing to take away here is we have a very dominant land position in the Koillismaa complex. We control over 38 kilometers of the favorable basal horizon, which is this area that you see through here, down through Haktilsa, Hakiaho, and Feeder. And then up here at Kukua, we also have the marginal phase up here, or the basal unit. And we were quite active this past winter. You can see a lot of these blue grids. These are all IP grids that we did. And this was a quite an extensive program. IP has a history of being very useful in the Koillismaa complex. The disseminated sulphide of the mineralization tends to show up quite well. And so we invested heavily in expanding outwards from the known areas to find additional mineralization. And we've had news releases on all these various grids. The focus that we're looking at right now is up in the Kukua area, where the drill is actually turning as we speak. It started up yesterday, and we had some very interesting results out from today. All right, we're going to go to the next slide. So this slide here is the greater Kukua area. And as I mentioned today, we just put out the results of hole 6, which is the best hole that we have to date. That was 166 meters, greater than 1 gram equivalent, including a core zone of over 60 meters at close to 2 grams palladium equivalent. And the reason that really is so significant, and it's got me personally very excited, is that what that has done is it's shown that this large anomaly here, Kukua South, is in fact produced by copper-nickel PGE mineralization. To orientate yourselves here, this yellow dashed line out here is the current Kukua resource. That's the pit. We have over 1 million ounces palladium equivalent in a 1 kilometer strike length up there. And as you can see, all the historic drilling really is quite clustered right in that area. They didn't really step out that much up at Kukua. Kukua was found not that long ago in the 90s originally, and most of the drilling dates from like 2008 to 2011. And it sat dormant for a great deal of time before, Palladium One picked up the project, and we've really kind of pushed it forward. But the bit to take away here is Kukua South. So this is an older IP survey right here. And this is the survey that we did this year. And as you can see, this survey here was actually thought the anomaly died off. There was a few bad lines with the IP. And that caused the previous operator to believe that that anomaly did not extend any further to the east. Well, we came out and we did this grid, and lo and behold, the anomaly not only extends this way, but it was very strong. And so we only got one hole into it until we had to shut down due to the COVID situation in Finland. And that is hole 6 right there. And this is a phenomenal hole because it really proved that this mineralization out here, this anomaly, is caused by very similar mineralization to the Kukua deposit itself. We also ran a reconnaissance line over here and picked up a strong anomaly as well. That's 1.5 kilometers away from the main Kukua South anomaly. So the takeaway piece here is that, this thing is now up to 5 kilometers or more in length. We've got 1 million ounces in 1 kilometer strike of the Kukua pit. This is a very, very prospective area to add significant ounces to the LK project. Before we pop away, I'll just talk about Myrtle Ampy up here as well. There's an additional spot up here that we've got some results still pending on. But I spent a little time up there prospecting last summer, and in a couple hours, I got close to 5 grams palladium equivalent up there, and it only has a couple of shallow 40-meter holes from the 1990s, and no one's ever been back since to follow it up. So this is only about a little over 2 kilometers as the crow flies from the Kukua pit. So you can really see that we have a great deal of targets in a very small area here that we think we can add significant resources with. All right, we'll move on to the next slide. So this is some of the results that we've put out so far. Hole 7 was on the down plunge of a higher grade shoot within the Kukua deposit. As you can see here in the top slide, we have 2 grams over 40 meters in that one, and that was quite that was a very nice hole because that proved that we did have a higher grade shoot within the pit, and now we have a vector for increasing the ounces and actually pulling the pit a bit deeper in the existing resource. But the big one that's out today, of course, is Kukua South. As you can see, almost the entire hole was mineralized, starting 43 meters down, right down to 200 meters. And this is really quite an interesting hole. It's really out by itself. It's almost 200 meters away from any historical drilling. It's the first hole into that Kukua South anomaly. And we really had a very nice core zone in there as well. As you can see, that's 63 meters of 1.88 grams palladium equivalent. So this has really kind of got us very excited. And in fact, the drill is set up right now, drilling an up dip hole on this to test the mineralization as it comes up to surface at shallower depths. So that's going as we speak. So moving on to some of the metallurgical advantages we have. As Derrick said earlier in the presentation, we have very nice high tenor sulfide. And this is very important for those of you that are familiar with copper nickel PGE mineralization, is if the tenor of your sulfide is not high, it doesn't matter how good your concentrate is, you're never going to have a very good saleable con. And so we have very high grade sulfide, like the 100% sulfide values, it's over 80 grams PGE per ton, including almost 60 grams palladium a ton, 13% copper, 10% nickel. So that's really a good starting point. We haven't done any met work ourselves, but the previous operators back in 2008-10 did a bit of work. They produced a composite. And the important takeaway here is they were able to produce a saleable con with standard bulk flotation on their first try. So you can see they got over 11% copper, 4.5% nickel, over an ounce palladium, 5 grams gold, and 7 grams platinum. So that's really very encouraging. And some of the tests, you can see they got even a higher percentage copper nickel. We do have a little bit of work to do on the recoveries. The rougher recovery was very good, but in the cleaner stages to produce that saleable con, we had some losses. But this is something that we think we can address with some further tests. And also very key here, the MgO was kept at 4% or low. So this is very good for the smelters to increase the value of your concentrate. So I'll move on to KS. As Derrick also mentioned earlier, we have 2 projects. We have LK and KS, and they are physically attached to each other. They're actually in the same age rocks, but they are very different targets. And this is why we treat them as separate projects. So LK, as you can see here, is the marginal phase of the Koillismaa complex. It's a bulk tonnage disseminated sulfide target. It's what I call the farming of the exploration world. We know where the horizon is. We're just trying to find the sweeter spots along that horizon, drill them off, and put them into resource. It's a pretty straightforward exercise. KS is a bit different. It's interpreted to be the feeder system of the Koillismaa complex. And this is a very much different beast. Here we're looking for high-grade sulphides, so underground, very high in situ value tonnages. And so this is just a quick chart here. Remember I mentioned that we had very high tenor sulfide at LK, and the reason we're excited about KS is if we can find semi or even massive sulfide with similar tenure, you can see that we would have very high palladium equivalent values in this material. The in situ value of this stuff would be very high. And so that's sort of the ultimate goal here, is that if we can find mineralization at KS, then this could be a very significant find. And there's recent examples of this in Finland with the Sakati deposit, where that was just found fairly recently, and it's a high-grade underground nickel deposit. And so just to show you that there is a very significant anomaly here. This is a gravity section showing this very large buried intrusion leading up to the Koillismaa complex. This is the mag down here. This is a real thing. It's had quite a bit of academic work done on it, but it was quite deep in the middle here, whereas we're focused on where it actually connects up to the LK complex. So this is a very interesting project. We're working at advancing it, but of course we are open to some partners on this one while we focus on LK. This is just a cartoon cross-section for an example. This is the modeled gravity of the body that we just showed you there with that last image. And for example, this is the Voisey's Bay long section, where you can see these feeder type structures and accumulations of massive sulfide. So a fairly well-developed target model that we have on this project. It is just a very different style of mineralization than the LK project. And so Derrick, do you want to jump back in here on some of the key takeaways for Finland?
Sure. So, just come back to KS for a second. Although it's a spectacular target with very high potential, from a risk reward perspective, our focus right now is the LK project and growing the resource there. And we think now is the right time to create another advanced PG project, simply because we've got inelastic demand from regulatory environment that is going on globally, and it's really coming head to head against a fairly inelastic supply. From an investment perspective, given there are limited investment alternatives, we think we're extremely well positioned being in a top tier jurisdiction such as Finland. But with that, maybe what I'll do is I'll hand it back over to Brandon and see if any questions came in. Perhaps not.
No.
Okay, let me just open up the chat feature here and see if we can answer. Oh, there we go. Go for it, Brandon.
Guys, it takes a couple seconds for the feed to come back in here, but we will go through a few of these questions. We'll start off with the very first one. Is your current cash position, as disclosed, I believe the slide said about just over $3 million, enough to provide full funding for all of your current summer exploration work?
Yes, it is. We're fully funded for what we're planning to do here, and we're looking at drilling about 2,500 to 3,000 meters as the second phase that started yesterday at LK.
Absolutely glad to hear. Our next one comes from the same investor, Jason. Did your resource estimate provide any sensitivity analysis to the palladium price? And if yes, did it project, for example, how things would change if a longer-term palladium price of $1,500 is used?
We didn't actually include that sensitivity analysis in the study. We kept it at I think $1,100, while the price at the time was $1,400. That is something we'll look at doing down the road. The sensitivity that we did produce was with regards to the cutoff grade, and what it shows is that the Kekua itself is fairly homogeneous and isn't that flexible with regards to the overall number of ounces or tons until you get perhaps a cutoff grade above 0.55 grams per ton.
Gotcha, and thank you for that answer. We'll keep moving on here. This one came in from Miko. What minerals can be recovered? What minerals can be recovered cost effectively, seeing some are low quantities?
Yeah, why don't you go for that?
Sure. So you're obviously going to be recovering copper nickel sulfides, which are primarily chalcopyrite, pentlandite. With that, you also recover a substantial amount of cobalt that we don't actually report, and you get some silver as well. So you really do get quite a suite of metals. I mean, the most valuable obviously being palladium. So the PGEs, there's lots of different platinum group minerals, bragite being one, kolskite. I mean, there's lots of different palladium minerals that you would be picking up, but we just sort of lump them together. So you're going to get the PGEs, platinum, palladium, gold. You will get some rhodium with that as well. It's also just at a level that we did not model it, but you're going to capture some. So, the most significant payable metals that we did not include in our resource estimate would be cobalt, rhodium, and silver that you would see in the concentrate that we would produce.
But right now, when at $1,100, the bulk of the value, and about 65% of the projected value, is in palladium.
Yeah,
absolutely appreciate that response. Frank is asking, when will you prepare a feasibility study?
Yeah, I think it's certainly something that we need to work our way towards. But the reality is, we don't know the extent of this deposit at this point in time, and I think we need to get a better handle on exactly how large it is. And I'll take you back to what I think is really the money shot right now, and it's this slide here, slide 14, where we're showing the various anomalies that we discovered this year. And if you envision that Kukua has over 1 million ounces in 1 kilometer of strike length, and now you see in Kukua South, which we discovered this year, you know, roughly 4 kilometers of anomaly lighting up more intently than Kukua. We're trying to understand just in this one zone how many more Kukuas we might find. And certainly the first drill hole in that area, hole number 6 that we talked about with 166 meters above a gram, I think bodes well for that. So we will want to drill this out a little bit farther, get a better handle on it. But right now we are actually dealing with a plethora of targets. So not only do we have this zone, we've got Myrtle Lampy, which we'll be drilling shortly. And we haven't even discussed the southern part of the property, the Hakiaho trend, where we have 3 very sizable anomalies that we uncovered this year and require some follow-up. But I think the key will be, let's build out Kukua South and then start going down the path of more engineering work.
Very nice. Miko asked a question. Who would be building the mine? I don't know specifically where. There's obviously throughout the presentation they were asking that, but that's the question coming from Miko.
No, that's a great question. And look, it's a small industry, as I pointed out earlier on. There's only about 5 players representing 85% of the market. And what we're trying to do is build up a sufficiently sized project to garner the interest of larger players. So I don't necessarily expect that we'll be building it, but we want to have a large enough project, district scale, where a larger producer can come in and they know they have the entire territory with lots of upside and a multi-cycle mining life of mine plan.
Yeah, and Miko had a follow-up question to that actually right after, and that was, do you have all permits already? And how long would it take to build a mine?
Yeah, so we don't have all permits to build a mine at this point in time. We have 2 types of permits, if you will. So we have exploration permits on core pieces of ground, and I'll just flip back here to this for a second here. So within the yellow outlines, you have the Kukua permit area here. The larger mustard line that encirculates it is what's known as a reservation. And there we have a priority right to turn that land into a exploration permit. And the same thing down on the southern trend. We have, various exploration permits where we have full reign to go and explore and do what it is that we need to do, while we also have some reservations. So the process is one where a reservation gives you a priority right to turn it into an exploration permit. We anticipate doing that with some of the existing reservation properties. And once we're in the farther advanced, have some baseline engineering or environmental studies done, we will look to make application for an exploitation permit.
Appreciate that. Continue with the questions. We've got quite a few actually come in here. Forgive me if I don't say this correctly, but what targets at Kukua South/East are you going after next? Will you be drilling more holes around hole 6, or will you be testing some of the IP targets farther east?
So I'll skip in for this one here. So on this image that Derrick just threw up, you'll see these black dots. Those are the holes that we drilled this past winter. The planned holes are the red ones. So we do have a few holes around hole 6. We want to get a better handle on the mineralization that we hit there. But as you can see, we're being fairly aggressive here and stepping out along that IP anomaly to kind of prove out mineralization along that full eastern trend. And we also have a few holes up at Myrtle Lampy as well. So we're really right now trying to see the limits of what we have for a system. And so that's what we're planning right now with the summer program.
Yeah, and I think the Kukua East area, it has some overburden. There's about 10 meters of overburden. So it's not a lot, but it is there. And that's part of the reason it was never drilled previously. So we have one hole into it. The next one we're scissoring off of where 6 was, so we can get a better handle on the geometry of the mineralization there. And that is part and parcel of the plan as we move to those red dots farther to the east, so we can better understand the orientation prior to going up to Murtalampi.
Yeah, and once again, I appreciate that, gentlemen. This one is from Tom. It's saying, current status is before a preliminary economic assessment. Therefore, investors don't have a cash flow model to base a per share valuation on. What is the best way for an investor to value the company at its current stage?
Well, that is the $1 million question, isn't it? And it's a tough one for the company to answer, because the regulators don't like it when you start valuing yourselves. So obviously there's some sort of value that someone can subscribe to or ascribe to the blue sky potential, and for example what this zone might hold, but it's largely unknown at this point. We just have an idea of what it might be. And as we showed in the earlier slide here, an analyst, very well-respected analyst, suggested that you could apply $1 per ounce to in the ground. So, he's talking about a range of $30 to $70 per ounce. You could apply it to the ounces that we have defined and come up with a value. You may want to adjust that for the blue sky. I've also seen other techniques where people are just saying, what's the in situ value, and some percentage off of that. And on the Twittersphere, certainly see a lot of commentary where people are saying, well, maybe it should be 2-3% of in situ value. But it is a little bit challenging until you get the economics.
Yeah, absolutely. The next question here is from Victor. Victor asks, how many meters will be drilled for your current program?
Current program will be approximately 2,500 meters, as we outlined in the earlier slide there.
Yeah, absolutely. This is a follow-up from Jason here. Is the expected 3-to-1 ratio of palladium to platinum expected to be consistent across the Kukua and also north on the Murtalampi target? I know I got that one wrong, but I know you know what I'm talking about.
Yes, actually, they have a very similar platinum palladium ratio in the greater Kukua area. So, there's slight variations, but the ratio stays about the same. Some areas have a little more copper, some a little less. But we've seen a lot of consistency actually in the mineralization. Like if you look at hole 6 compared to the main Kukua deposit, they're very similar.
Yeah, perfect. The next question here is, do you have any timeline for potentially doing a PEA? Is this a 2021 thing or after a bunch more infill and exploration drilling at Kukua?
I certainly think it's something we're going to be thinking about quite strongly at the end of this program. And so it's very much a 2021 conversation, but it's a little bit early just yet. I think we'd like to get the results from the current program. They'll obviously require more infill drilling after that, and then we'll be in a good position to judge.
Fair enough. Victor is asking another question here, and it's so I'll reword this a little bit. Is it going to be producing copper concentrate and nickel concentrate separately?
Sure. So I'll wade in here. The original tests that were done by the previous operator did not do a split. They were doing a bulk con. That is something that we will be looking at because obviously you do get a bit more valuation if you can produce a split con, right? So that is something that we have planned. We have planned some more metallurgical studies. It's just that we have to prioritize with the funds that we have, and at this stage, we felt those funds are best spent in increasing the resource on the Kukua area. So that is on the to-do list, is to do some more met work and eventually produce 2 metal streams.
Absolutely. I believe it's the last question here, and it's at what time frame will you need more funding? A question we always hear.
Well, we're pre-revenue, so you always need additional funding. We're very hopeful that this next bit of drilling is going to be very successful. We've got I think a steady stream of results that are going to be coming out. Hopefully, we don't need to go to market, and that some of the warrants that we have outstanding will be an internal funding mechanism, if you will, that would allow us to do the initiation of the phase 2 program this winter. So we're not quite sure at this juncture.
No, absolutely. Again, a very fair answer. Well, gentlemen, I appreciate very much taking the time and going through all of this. For all of our attendees and investors that are out there, appreciate another long day of talking with a lot of good companies and find a lot of information. We're going to be kicking this back up again tomorrow at 10 a.m. Eastern, and we'll go all the way through until 3:30, where Rick Rule will be finishing us off tomorrow as well. Derrick, did you want some closing remarks for your company and your presentation today?
Well, thank you very much for your attendance, your interest in Palladium One. If there's any questions you might have, please feel free to reach out. Our contact details are on the website, and wish you all the best as we finish off the summer.
Absolutely. Take care, everyone. Enjoy your day.